things before. Like, for example, here in climate, less precipitation that push that the soil moisture was dramatically reduced, so the vegetation was under stress. So there is a sequence in time of these events. And if you have a sequence in time and you can measure it, that means that perhaps you can design an alarm system beginning with, I have less precipitation than normal. So perhaps there is a lack of time, and then we have less soil moisture than normal. And then we have a vegetation index lower than normal expected at that time. Okay, so we just applied that to one of the provinces that we have, and that we just saw that there was a nice correlation between the NDVI and the damage. And we just apply the standard precipitation index, a soil moisture anomaly index, very similar to this one, calculated very similar, and also the anomaly of the NDVI. And then we just saw that perhaps, with different rules, we can apply an alert system just to gradually just say this is going well or this is going wrong. So when we just compare with the real situation, you can see that here we have like 2 lines in each of the years. This is the insured area, and this is the damaged area. So if they are really apart, no event really was happening. But if they are very close, like here, that means that there was an intense event of drought that damaged the cereal. So we can see that when these 2 lines are quite close, looks like this alarm can help to decide things, and of course, further research necessary. So which are the critical events? Well, as Isabel said, the vulnerability of a crop is different depending in the development of that crop. It's not the same that you have some event when they are just germinated or is in an emergence, that when it is close to maturation or harvesting. So vulnerability change in time too. So perhaps when you have an index, the value of that index, the damage depend at which stage you are in that crop. Okay? Well, so for that reason, it's very, very important to know also the phenological stages and in which states they produce. Okay, well. So what about the quantification of this risk? Okay, well, I can be talking a lot about that, but I think that the use of time series analysis is really important, not only because we can do also some statistical analysis values on that, is because you can see the trends and the patterns that we could have. And in the scenario of climate change, that is really important. Okay, so perhaps, if we just have some historical of the yield of tomato over the years, suddenly we have this. We can do a statistical thing. We can put the average, the standard deviation. But if I introduce time in this, what I can see is that there is a tendency. And then, for example, you can just do a simple linear regression to see if this trend of each time the yield is increasing for different reasons. Then we can begin to investigate why is that, the technology, or there is some advances in the management, etc. Okay, so if we want to forecast, the time series allows us to do that forecast and to estimate in the next campaigns, which is the yield, and multiply by the area, which is the amount of crop that is in risk. That is one of the factors in this calculation. Okay, so which steps should we follow in this risk quantification? Of course, the data collection, the pre-processing, knowing that data is right, or there is some outlier, or see the extreme events, and which is the impact on that crop. So if we just represent again here the yield in that time series, perhaps we have just see some events and the severity of the events between 0 and 10, for example, we can see in each year which has been the variation. And even we can relate also the yield that we obtain with, if this intensity was 8, in the event, we can see which is the damage that intensity of the event produced in that crop, okay? So just putting that graphic in numbers, what we can see is that when there is no event, we can see that the yields more or less is giving us some numbers, and that is what in normal conditions, in good conditions, we can get. But also we can see that, of course, if there is a flood or if there is some frost, then that yield just change. Okay, so then can we, with this data and with these thoughts, can we estimate if what will happen if the intensity increase? Yes, sometimes we can build models. Someone's just put linear regressions. I just like to put more another type of regressions. And then from this range of intensity, also you can estimate what is going to be the reducing yield if that event, the intensity increase. And that for projections in the future is very useful. Okay, so of course that depends about the model, can be certain uncertainties for your estimations. Okay, so what about one of the index that we quantify is these losses associated with the risk? Well, so we are going to put here this example and say, okay, so if there is no extreme event, my yield will be around this number. So what will happen in the losses? Well, in the losses, beside the severity, we begin to put the price. And in this price and with these yields, we begin to see the loss in this in amounts of monies. Okay, so from this, financially, we have to begin to calculate how we can handle this loss in time. Okay, so what happens if we don't have data or our data is quite poor? Well, so for that is other situations similar to us. For that is models based in process that we understand, that we can simulate, and to have some estimations that can help us to begin to take decisions. Okay, so how we are going to adjust this insurance? Well, there are three common concepts that are always used. One is the loss of exceedance curve. Another one is the average annual loss and the probable maximum loss. So in the first one, really what we do is just to identify that hazard events and their probabilities to happen, and try to estimate the losses for each type of event, and just to put it in an order so we can begin to see probabilities. For example, with all that data, what we can get here is this loss exceedance curve, where we can see the loss in millions, and here is the probabilities to have a loss greater than. Okay, so for example, to have a loss greater than 10 millions is going to be 30%, or to have a loss higher than 20 millions will be more or less 8%. And that just gives you a help in the financial part, okay? So in this case, well, I just put here a little sample just to be practical, but I suppose that this presentation is going to be public, so you can, if the formula is not well understood, then you can see the example and just do it. And of course, data quality is really important. The modeling, the uncertainty in the modeling is a crucial point too. And there is a lot, quite of software tools to calculate all these things very easily. Well, and what about the average annual loss? Well, but this concept means the expected loss per year due to those hazard events. The only thing that we just put is multiply the loss with the probability, and that is the expected loss. So in that case, we just begin to take our probabilities, the estimated loss, and begin to multiply and make an addition, and this is the average annual loss. This is not only for insurance, is if you want to decide if to cultivate something in some place and for how long, that is giving you also an estimation if you are going to assume that risk or not. And finally, I think that this is the probably maximum loss, is which is the largest loss that we could result in a single event. And for that, what you do is to rank your events and just to put a return period. And well, in this case, it will be that the maximum loss, in 100-year return will be this estimate and with this probability. So just to do, I don't want to extend too much more time, but just to do a little comment on new technologies for this risk and insurance sector. Well, in crop loss assessment, I think that the new technologies that each time is not so new, more and more frequent, are here to help, for data collection or to help us in processing that data, or also to develop models that hasn't to be with the classical statistical technique. And in that, I am referring to the machine learning, just doing regressions that are not based in a classical statistical, where everything is based that you have to handle normal distributions. That is not true, and is less true when we are talking about risk. Also can help us to validate things, and also, of course, to calculate this risk assessment. Everything for this crop loss assessment. I am talking also about low-cost sensors, if you want to measure what is going on there, in remote sensing, in drones, etc. Okay, so if there is a claim settled, yes, I think that, of course, that if you have a really good organization and the claims can be going there to visit, etc., that is fantastic. But if you don't have that system, also perhaps they can estimate you things there. And for that reason, many times we can see that there is a lot of proposed and things going on in Africa, where is areas that are very difficult to visit. So all these new technologies, I think that they can help a lot to begin with some type of insurance system. And finally, for the product design, as all of us, we receive offers from our insurance in our home or our banks offering us product for us. Also, that could be a way to apply which type of insurance to offer you, because now I have a better description of your farm system, of your crop, of your interest. So perhaps I can begin to offer a more prêt-à-porter insurance for you. And just to finish, and sorry that I extend perhaps too much, I want just to remark that for us, how important is the data. And not only to have data, is the continuity in time of the data that can tell you so many things, and then we can help so much in design and calculate things. Also, climate change, just make us that we have historical statistical analysis, but now time series is a key tool, because it's not only the background, it's the dynamic and the trends that can give us in the future or next future the increase or decrease of certain events, okay? And the risk quantification, well, new technologies, I think that new technologies are not going to resolve everything, never have been, but can step by step improve our quantifications in risk, okay? And I think that all these advanced analytical methods and new technologies can be of really good help, always with the hand of the experts in the area, because the experts in the area always are telling you if it has common sense what you are doing or not. And believe me, I have been 30 years trying to apply and to do new things, but always I am sitting beside someone that is telling me, yes, Anna, this has common sense. Or, Anna, there is something that here doesn't fit well. Some methodology, you are just too extreme in some assumption that you have made. And that is all. It has been a pleasure, and sorry that I couldn't go there at this time. Thank you so much.
Thank you very much, Professor Takis and Professor Badji. At this moment, this time, let me open the floor for questions. However, we're going to reduce our time slightly to 10 minutes for us to try and recover some time. So let me please indicate that if you like to pose a question and to who would you like to pose the question. Go ahead.
Cheryl Daniel from Caribbean Policy Development Center. In terms of the presentation, the hazards were really individual hazards, but considering the multi-hazard environment that we've been operating in, can the models take into account the multi-hazard environment?
Professor Takis. Professor, did you hear the question? Can you repeat the question, please?
Yes. So the presentation, the specific hazards were identified in terms of the modeling. But of late, we've recognized that we've been operating in a multi-hazard environment. Can the models take into account such situations?
Go ahead, Professor. Professor, did you? Professor Takis, did you hear the question?
No, I couldn't hear, sorry.
I apologize. Hold on.
Can you hear me now?
Yeah, now, yeah.
Okay. So what I was saying is the presentation made reference to individual hazards. There was a table that was presented and it made specific reference to individual hazards. But of late in this region, we've recognized that we've been operating in a multi-hazard environment. In terms of the modeling that was presented, can it take into account such environments, not just an individual hazard, but a multi-hazard environment?
Yes, it can. You know, I just tried to do a more general presentation, but yes, there are models with multi-hazards. And in these multi-hazard models, also you can introduce if there is could be some relation between those hazards also or not in different ways. One way is if one of the hazards produce, the other one will increase the probability to occur. That is one point of analyze it. The other one is that if a hazard occur and damage the crop, then is the crop vulnerability higher for the next hazard? So you can introduce those variants in the model. Yeah.
Thank you very much. Any other questions? Okay, I assume that since there are no questions, the presentations were actually very insightful. So let me thank Professor Takis and Professor, I apologize, Badaji, for their very insightful presentation. We'll also seek to circulate the PowerPoint presentations. Thank you very much.
Sure. Okay.
At this point, let me introduce the next panelist, and that is Mr. Alistair Glean, who is the representative for the Inter-American Institute for Cooperation on Agriculture in Barbados. He spent the last 5 years as the international specialist in agribusiness and value chains, stationed in the St. Lucia delegation. He has worked in the agricultural sector for over 20 years with experience in agricultural research and development, agribusiness development, food and beverage processing, and developmental financing for agribusiness. He has lectured on a part-time basis at the tertiary level for over 16 years in the areas of marketing, strategic planning, and business ethics. While trained as in management and marketing, he also possesses postgraduate qualification in international relations and agribusiness development. He is a qualified attorney at law, didn't know that, and has a particular interest in governance and market development and trade facilitation. He has a passion for working with micro, small, and medium-sized businesses with emphasis on women, youth, and producer groups. In fact, he himself also is also a small farmer producing food crops. Let me welcome Mr. Alistair Glean.
Thank you, Mr. Février, for that introduction. And it sounds grander than it really is. Again, I want to thank the organizers for inviting ICA to participate in this activity. ICA is committed to supporting the OECS in the execution of its FAST strategy. So, Director General, you know my colleague Greg Rawlins is very committed to working with the Commission, and of course we are happy to do our part here in Barbados. I am flanked by two key individuals who we support. As you would note from my introduction, I am not an expert in insurance. I hope to do some type of justice to this presentation. I want to introduce my colleague in the back, Mr. Stephen Haynes. It was supposed to be a jointly conducted presentation, but given the format today, I will just try my best to deliver on my own, and in the interest of time, try to manage the slides accordingly. I want to thank the presenters who came before me because they laid the groundwork quite well. I don't think I really need to say anything. I want to be able to touch on the environment for insurance, looking at the market issues. And I'm glad that we recognize that there are various risk management or risk reduction mechanisms that we can explore. And one of the colleagues did present a fantastic overview of them. And I want to stress that insurance can only be complementary to these risk mitigation measures, and we shouldn't see insurance as the solution to all our problems. But ultimately, this insurance topic is very important because when you look at developed countries, and the presenters who came before, particularly the colleague from Spain, highlighted that insurance is a key risk financing tool for mitigating risks, and we see how in developed countries it has been used, but somehow in the region, we have to be honest, it is not something that we have made as a mainstream type activity, but insurance is critical. And sadly, producers, and I think even policymakers, no offense to anyone in the room, we sometimes only see insurance as an investment that is really value added if it is that the claims or the payout exceeds the actual premiums that we pay. And even our own personal lives, a lot of times we don't want to have insurance, we don't want to pay insurance premiums because we feel as if it's a waste. But it's an umbrella, it covers us. And more than that, with respect to agricultural insurance, I think something we need to recognize, and I think it was Professor Takis that said this, that ultimately there's a link between insurance and financing and overall economic development. If you have insurance schemes in place, the banks will probably easier recognize as collateral for loans and will link their loans to the insurance schemes, and thereby allowing farmers to continue their operations and invest more heavily. I think that's one of the challenges we have in the sector here in the region. We don't have enough investment in agriculture and fisheries. So the insurance is really critical for us, and particularly if we're talking about economic development and we want to pursue the FAST strategy and 25 by 25, we need to see how mechanisms such as insurance can contribute to this process. So let me first of all start off by recognizing that insurance is the equitable transfer of risk of a loss from one entity to another in exchange for a premium. I think that's the key thing we need to recognize. And that's always the challenge in the region, that you have to pay the premium, either the producers themselves or some other entity, the government, etc. And the risk-bearing entity obviously is the insurance company, and the risk transferring entity is ideally the purchaser of insurance. And in the region, we've had a lot of challenges addressing this insurance issue, and I know presenters coming after me will focus on the issues in the region. So if I can move on, just to give a little overview on the state of agriculture, and just a few quick points. You know, traditionally, in the past, our agriculture was mainly plantation-based for the OECS and Barbados, sugarcane, St. Kitts, Barbados, bananas, the Windward Islands in particular. We've seen in more recent times increased diversification and a straying away from that plantation-based approach. And there's a lot of focus now on production of root crops, the dasheen, the cassava, the sweet potato in particular, my favorite. And to a lesser extent, we are doing fruits and vegetables. Vegetables are growing in prominence, and we see countries, St. Lucia, St. Vincent, Grenada, etc., focusing on the vegetables and spices in terms of Grenada. And in terms of the contribution to GDP, it ranges still pretty low, 1% on average in St. Kitts and Nevis, up to 15, 16%, probably higher now in Dominica. There's increased focus. And in terms of contribution to the labor force, we see in Antigua and Barbuda, it's as low as 2% and as high as 30% in Dominica. And when you look at countries like Haiti, it's much more, almost like 50%. And the size of our farms, very small. I think vast majority of farms, almost 80%, are under 12 acres in size. The majority of them are even smaller, under 5 acres. As Lynn said, I'm a small farmer myself. My farm is 2.5 acres. So that makes up the majority of farmers. And that in itself is one of the challenges with insurance in the region, is that these farms are so small. They don't want to make the investment. They don't want to pay the premiums. And sometimes scale matters in insurance. And my colleague, I'm sure Isaac, will speak to those issues. And for fisheries, and I hope the fisheries people are here to support me in this, the majority of our efforts are traditional. There's a lot of investment, yes, in the boats, but in terms of the mechanization and the huge commercial ventures, there are less of those than the traditional vessels that we see out there. And the issue of gender, women don't make up a significant proportion of the actual producers, the direct producers, probably somewhere between 15 to 30% in the Eastern Caribbean. But when it comes to the distribution, the marketing side, women play a more critical role. A lot of times they are the higglers, they are the ones who are the vendors, particularly for the fisheries sector. So women play a critical role. And even more now, we want to encourage more youth in agriculture and fisheries. And we often talk about the aging population in agriculture. So it's good that today I'm seeing a number of youth in the room. I used to like to boast that I was one of them, but don't feel so anymore. I have to do the dyeing of the hair, etc., to look young still. But it's good to have youth involved. And if we want to have a viable sector and we want to talk about food security, we need to put mechanisms in place to encourage more youth in agriculture and fisheries. And ultimately, as I said, insurance is just one of the issues. There are a lot of other factors that impact our production, our overall drive towards food security. But make no mistake about it, we are here today to recognize the role that insurance will play. So the market for insurance, I think the ambassador started off talking about the impact of beryl. It's so interesting that we were supposed to have this workshop in July. I don't know if you all remember this, right before and beryl took place. So this workshop is so pertinent and relevant. We have a prime example. We don't have to go back and talk about Maria, Thomas, whoever. Beryl was just the other day. And God willing, we won't see any more names for the rest of the year. But the reality is these events are challenging us. And beryl is a perfect example. We saw the devastation in Grenada, St. Vincent, to our colleagues up north in Jamaica, there was significant devastation. Right here in Barbados, while the agriculture sector may not have been directly affected, I think so, P.S., we didn't get much. Not crops, but the fishery sector was severely devastated. And a lot of times persons looked on social media and they saw the boats rocking in the wind and persons complaining about the aftermath. The aftermath, those photos show you a bit of the aftermath. And I remember my colleague at Fisheries, the chief fisheries officer, initially telling me that over 220 boats were damaged, 40 boats were sunk, and I think 22 totally lost. Millions of dollars gone down the drain. And the reality is that we really can't prevent the events, particularly these climatic events, these weather events. We can't prevent them, but it's about the recovery. I think that's the critical issue. It's about the recovery. And that's where insurance would come in. I remember talking to some of the vendors at the fisheries end, and they were saying, you guys in development often focus on the farmers and the boat owners, but you have to think about the persons who depend on the production, the output from these ventures. What is going to happen to us? And the longer it takes to get these persons back on their feet, it has a ripple effect on the rest of the industry. And that's the real value that we have to consider for agriculture. All those persons who depend on the output from the sector for their livelihoods. In fact, I remember asking persons, are you coming to this workshop? And one of the vendors said, how can I come? I have no livelihood now. School is opening. How do I pay for my school children's books, etc.? And it brought home to me that while we are here, taking a little nice snacks, enjoying the air condition, well, it's hot up here, people are suffering. And if we have viable insurance products that are attractive, affordable, sustainable, it really will make a significant dent in our efforts at driving agricultural production and food security in the region. So I just wanted to paint that particular picture. So maybe we can move on. I know time is against me. Just quickly to say agricultural insurance, it differs from other types of insurance, non-life insurance. And we have to think about the asset coverage. We heard one of our colleagues talk about that before. It may cover crops, livestock, equipment, etc. We have to consider the actual risk, whether it's damage or we are talking about pests or diseases. We could talk about the actual scope, and we know that there are different types of insurance in terms of whether it's indemnity-based, where the product is one that pays out based on the loss that occurs when an event happens, and that would require an adjuster to go out and do the assessment. While it's good in the sense that you actually receive a payout based on the loss you have experienced, sometimes the processing of these claims takes a long time. The deductibles that are included as costly, the subscriptions are high. A lot of times the producers or the persons paying for the insurance, it's a bit too onerous for them. We have named peril types of indemnity insurance where specific perils identified in the particular policy versus a multi-peril that addresses all perils unless they're excluded in the particular contract. But there's some value there. However, we talk about the index or parametric type insurance. I know Isaac is going to come on after to speak on that, and he's the expert. And where you find that the payouts are based on predetermined figures if the index or the measurement levels are actually met or exceeded. And I think Professor Tahis spoke about that. Very good, because why? You don't have to go out and do the assessment. That's one of the challenges I think we have in the region, persons to actually do the assessment. And with the parametric insurance, at least you have data to guide you, and you have that predetermined amount, so it limits the amount of fraud that may take place, which is another issue that has plagued us in the region in terms of payouts. So it's a lot easier to manage. However, we talk about basis risk. What if the payouts don't really address the losses experienced by the producers, or it's more, or it's less? So, so those are some of the things that you'd want to consider. And as I say, I hope that when my colleague from CCRIF comes in, they will focus on the issue of the parametric insurance. Going back now, Zachary? Yeah. So we talk about the micro-type insurance as well, in terms of the overall scope. And all of them meet the needs of the producers trying to bring you back to a place where you were before in terms of what insurance does. But you have the micro-insurance, and as it says, micro primarily targeting small farmers or producers directly pay into the insurance scheme. They may pay their premiums and the payouts are made directly to them. In the region, that's probably what's most applicable, small farmers. But I suppose for more developed countries, you may have microinsurance that deals directly with some of the big producers, but they could afford to pay a premium, etc. And they see the value in making those investments versus the meso-level type insurance that is provided to firms or aggregators, such as exporters or farmer groups itself, that they pay a premium to an insurer, they receive a payout, and then they pay to farmers. They may set terms of what they'll pay to the actual farmers. They will tell the farmers what they have to pay to the aggregator, and that's that type of middleman type product that exists versus the overall macro level type insurance or the sovereign level insurance that we see in the region, where a national entity or the government takes out insurance, probably with a secret for Grace Kennedy or REAP, whoever the players are, and the government entity would be paying directly, or may paying the premiums to the insurer. The insurer makes the payout either directly to the farmers, but in most cases in the region, the payouts are done to the government, and the government then pays to the farmers or distributes the payout accordingly to address national priorities, etc. And the government would best be positioned to address that. So different levels, different scope, different types, etc. And something we need to consider is the source of the risk. I know the colleague who came before me would have spoken to the different types of risk, whether it's weather or nature-based. And I think that's something that we need to also recognize, that it's not just about the climatic changes, about reduced levels of precipitation, drought, increased temperatures, rising sea level, but there are other risks that are involved in terms of pest incursions, disease incursions. I'm sure most of us would recognize that right on our doorsteps, there's the fear of TR4 coming to the region and impacting on the banana and plantain industry. If it comes to the region, it's going to wipe us out. We also talk about African swine fever. What's going to happen? Is insurance going to address those things? But don't want to make a big deal or scare anybody, but those are the other issues besides simply talking about climatic events. And then there are other hazards, natural hazards. I'm sure my colleague from St. Vincent, Michael, will tell us experiences from the volcano. Correct, Michael? It was the volcano. How it impacted on production, how it impacted on farmers in St. Vincent. So natural hazards, floods. As I said, for me as a farmer in Trinidad, that is always the thing that I'm fearful of. Always an issue of flooding that may take place. The droughts impacted us significantly. So there are other issues besides the climatic events that may impact on the farmers. And of course, when you think about Pradia Lasny, I think most farmers would probably want insurance to deal with Pradia Lasny, even more than some of the weather events. It really sets you back, and it sometimes brings big men to tears when they go into their farm and see what the other owners do to their production. And right here in Barbados, or even St. Kitts, yeah. St. Kitts and Nevis, look at what the monkeys do. Anybody here from St. Kitts, Nevis? Yeah. So you can tell us about how monkeys devastate production. And right here in Barbados, how the monkeys come and just pull out your crops, discard them, pelt them at you. You know, just have a time. And then what do? There's nothing to help you. So there's so many issues for us to consider. All right, let's move on. I think I'm blagging too much. So the value chain, though, I think that's something we need to consider for insurance. And we would want to note that consists of different players. At the input level, we talk about the role of the reinsurers, so critical. And when you look at the value chain, we really want to ask ourselves, how can we make improvements? Where there's the connectivity, where are the weaknesses in the chain, etc. But the reinsurers play a critical role in providing insurance or insurance players here in the region. The Seacrifts, the Grace Kennedys, they all rely on reinsurers. And the question I always ask myself, in fact, last night we were having a discussion with another insurance colleague, will reinsurers continue to service and support our insurance players in the region, given the increasing intensity of some of these very same climatic events, all these payouts? Will they continue supporting us? And I really hope that some of the colleagues can discuss some of those issues, and that's a serious threat to us going forward. But then we talk about the persons who actually provide the insurance, the Grace Kennedys, the Windcrop, the Seacrift Coast, that provide these dynamic products to our producers, our governments. The challenge sometimes is that we don't know enough of it. As producers, we are not properly educated on the value of insurance, and those are some of the things to consider. And some of these players, Grace Kennedy, I suppose, Seacrift, they go directly to the actual users or policy holders, whereas you find so they serve as distributors of their own product, whereas there's like a Lynch brokers based here in Barbados that serves as a distributor, as a broker, as an intermediary, like a middleman to provide insurance products to producers. And again, as I said, how can we improve the different elements of the chain? And of course, we also have to consider the support mechanisms, whether it's the government, the research entities, the CARDIs, the ministries, the extensionists. A lot of times we have to consider the role of extensionists. We underestimate the role of extension to ensure that farmers and producers and fisherfolk adopt other risk mitigation measures and climate smart practices. So again, we focus on insurance, but we're not thinking about the other risk mitigating measures that are needed. So we need these support entities if we make the whole system work. And ultimately, we need the donors, the persons who are willing to contribute, the financiers, to contribute to making insurance viable here in the region. So we have to ask ourselves, how can we improve the value chain? Where can we make improvement? And that's a question I'm throwing out to you all. I don't have all the answers, but I know that there are presenters here who might be able to add value to this discussion. And ultimately, we had to ask ourselves, why are we here? And as the Director General said, we want to chart a course for establishing viable, affordable, attractive insurance products in the region. Ultimately, for what purpose? To enhance food security for the region. So I hope this is a workshop indeed where we are doing the thinking and the talking and we're not falling asleep or on WhatsApp, but we're really thinking out the issues. Okay, so let's move on. The market for insurance. One of the challenges we have, and I was telling the PS just now, I didn't realize there was so much data on climate. I'm not a climate person, I'm no scientist, but I was my head was spinning with all the information I was seeing. Really, really good information. But for a lot of us, we do have data regarding production and number of farmers. That's always the challenge. Somehow can you plan, how can you make decisions if you lack that information? So we really need to consider what's the value of the industry. And I think a lot of times for policymakers, how can I invest in a sector where I don't know what's the real value of the information? But on the most basic level, we could recognize in terms of the value, look at the number of farmers and employment and production, etc. And both the number of boats in terms of the fisheries sector determine value. We have some figures there for the various countries. We have the figures in terms of the number of farmers and the number of boats. Right after Antigua, we see 1,500 farmers, 371 boats, down to St. Vincent and the Grenadines, where the highest number, 11, over almost 12,000 farmers. Hope I'm correct there, Michael, help me out. And almost 1,000 boats in Barbados. We noticed that there were almost 5,000 farmers and almost 1,500 boats. PS, are correct with the number of farmers? Or more? Or more? I think there are more. But commercial farmers, etc. So we see that there's value. I think even for the fisheries sector across the region generally employs almost 300,000 persons. And for the farming communities, probably triple that. So there are a lot of persons who are involved in the sector, so it's value. So when we think about the market, those are the persons we want to service. Ultimately, there's a market for insurance in the region. Okay. Zachary? Okay, so briefly, main customer groups, the governments, the different firms, etc., the individual producers, fisher folk, vendors. And again, why are we here? We have to consider getting products and establishing insurance in the region. I believe there are products out there. I saw the guy from Grace Kennedy in here, Seacliff is here, probably Lynch Brokers are here with REAP. But ultimately, do we have enough information? I remember every year around quoted, I speak to Isaac Anthony and ask him, tell me a bit more, give me an update what y'all are doing so we could present it to the ministers. And I feel as if a lot of times producers and a lot of government players don't have a full appreciation of how insurance works and the products that are out there. So I think more sensitization is required. And also people need or players need the resources to invest in insurance. And there's always the competing interests. And a lot of PSs are in this room. Agriculture wants resources or needs insurance, but tourism is calling for it, health is calling for it, national security, education, competing interests for that whole share of the government's pocket. So the issue more than that is, while we have insurance in the region, what are our needs and are our needs being met? I think that's the critical question. We want to have something that's of value. We know in the past, for instance, the Windward Islands persons here would know about wind crop, how well it worked, how it probably safeguarded banana players, got them back on their feet. It's on the way out. We've seen the demise of it. Why hasn't it? Why didn't it work? Why wasn't it sustainable? So many issues, fraud, poor management. The list goes on. I don't have the evidence, but persons say it has not been sustainable. And now we have different products in the region. We highlighted some of them and different solutions to governments. Somehow we don't seem to be injecting the requisite amount of resources to make it widespread across the region. So for instance, coast, I know we'll talk about coast in a bit. Coast to me is only in 2 countries so far. I believe Grenada and St. Lucia to support the fisheries sector. And again, coast is one of the more dynamic products that even supports the vendors. But why aren't we seeing more countries adopting coast? REAP was launched. What is the status of REAP since it has been launched? Is there uptake, etc.? So I would really like to get more information on that. So let's move on. So ultimately, as I said, are our needs being met? And that's another question we need to ask and have dialogue on during the course of the next few days. So going back to the issue of demand, what are the factors that influence demand? I spoke on some of those already and the presenters before, the various natural hazards, climate change. I spoke on some of those things. We've seen an intensification of weather events, the storms, the hurricanes. I think the ambassador said that Beryl was the fastest storm or the first storm in the region or something like that. But we are seeing changes. We saw what happened. Let me go back a bit with Maria, how Maria impacted Dominica, category 5 overnight. So climate change is a serious issue. Of course, as I said, Predia lastly, I'm still of the view that a lot of farmers, if there are farmers in here, would say that they are more concerned about Predia lastly than some of the weather events. Pests and diseases, financing. We don't have financing. So if it is we don't have enough financing, how will we really and truly affect some of these insurance products? That's a key factor that influences demand. And I'm sure when Isaac and my colleague from Grace Kennedy come on, they will tell you, we need resources. Insurance is costly. Let's make no mistake about it. It's going to cost a lot. And we need the finances to be poured in, or the persons to agree to contribute to them. When we talk about the PPP models tomorrow, I suppose we can get into that. And food security, or food security priorities. We talk about 25 by 25, we talk about FAST strategy. If we are to really achieve those strategies and those programs to be effective, we need the insurance as a backup when a shock occurs to get our people back on their feet as quickly as possible. So these are some of the factors that influence demand. So let me see if I can try to wrap up quickly. Now, ultimately, as I said, we want to understand the environment for insurance. We want to appreciate how it can work, and there are some considerations. If we look at the macro level, some macro environmental factors, first of all, the economic issues. The reality is that agriculture is a critical industry. It plays a role in job creation. We talk about food security. We note rural development, all those benefits of agriculture. But there are competing interests, and I'm sure the PSS here will agree to that. As I said before, education is calling for resources, national security, health. So it's a challenge to really get the resources for agriculture, and we need investment into the sector if we are to make the insurance products viable. We need bigger players to come in. We need to increase from the small scale players to the more larger scale producers, and they will have the uptake of insurance, etc. And the reality is, government players are insurers in denial. I know I heard that term going around. And when I say insurers in denial, what happens? When most times when an event occurs, a shock, governments give you, I don't know what the term is in the Eastern Caribbean, but it's generally compensation or relief. And for me, I'm ashamed to say this, and I hope this is not public, but as a farmer, I look forward to when my flood relief payment comes in. It helps me back on my feet, but sometimes the flood relief payment is more than I actually get in the marketplace. So, but governments can't continue to do that. And I think the policymakers here will agree, you can't continue to making these flood relief payments, but we need to invest the resources into proper insurance products that are sustainable. So that's a consideration for us. Zachary? Yeah, so some quick points I just want to share. As I said, some of the producers may not have the disposable income to contribute to making premiums, etc. And as I said, insurance can be costly. Now, in terms of some of the political issues, though, the fortunate thing is that in our region, we have a stable political climate. We have no wars, no disruptions of what you would see in Latin America or in Asia, etc. So there's the right climate for investment, and that's a benefit that we need to recognize. Now, and all governments in the region have prioritized food security, and as I said, the reduction of the food import bill and all the other strategies, that is a priority first. So ultimately, there's an opportunity for us to really craft or really have the uptake of insurance products across the sub-region. Okay, so let's move on. Some of the cultural issues that are going to impact, that's going to impact on the insurance industry. Ultimately, there's a general disinterest on the part of producers to purchase insurance. And the reality is producers don't have information either. An insurance purchase, insurance procurement is a high involvement type activity. It's like buying a house. You have to give thought to it. It's not the same scale as probably buying a house, but you have to give some thought to this decision to purchase insurance. And we need to give producers more information to allow them to make sound decisions. We find that in our industry across the sub-region is, as I said before, comprised mainly of small-scale players, which impacts on the ability for us to acquire insurance. And one of the concerns from a cultural perspective is that insurance doesn't work. A lot of producers are fearful that even if I contribute or if the government contributes, the payouts don't trickle down to me, or it takes too long for me to get the payout. So those are some things that we would want to consider. The industry is also plagued by non-compliance with some of the guidelines regarding risk mitigation. So a lot of producers don't engage in climate smart practices. And again, that's where extension would come in. Okay. So let me move on to the technological though. Fortunately, because of the digitization of agriculture, we find that persons can engage in more precision agriculture and adopting the very same climate smart practices. So again, that's an opportunity for us to minimize risk, and therefore we can cut the cost of insurance, or at least have less reliance on payouts, etc., because we'll make better decisions as producers. And another factor, the environmental, which is probably the most important one, because of climate change, it's really going to challenge our producers, and it's going to make the cost of insurance probably go up, because the more payouts, the more events that occur that require payouts, is going to impact on the ability of insurers to continue operating and for reinsurers to express their support for our insurance companies. And again, I'm no expert, and maybe Isaac could expand on the role of the insurers a bit. All right, so going on the micro level now, quickly to wrap up, competition in industry. A lot of competition, but how viable they are. And there are different players, and they will come and speak for themselves. And some of the consumer issues to understand our producers, how they think. As I said, they need insurance to be able to sustain production. They have fears about whether the insurance will work. They have limited information. And ultimately, some of them are critical of the system in terms of if at the sovereign level payouts are made to the government, will they receive payouts as well, or will the payouts go towards other priorities? Okay, so I'm wrapping up in the next minute. Quickly, if we look at our SWOT, there are some strengths in insurance. We have a lot of research on the subject. We have some good products in the region. We have the government priorities. Some of our weaknesses is very costly. We have limited resources to invest in insurance, and we are very vulnerable to weather-related events. And the opportunities, we could consider in the region, just like how it worked for bananas, more single crop value-related crops, hot peppers, etc., that could allow us to pay for insurance. We can look at PPPs, and as I said, tomorrow we'll look at that. We have more technology, we have climate smart practices, And we're here in Barbados, and I'm sure you all have often heard the Honorable Prime Minister Mia Mottley championing the cause for climate financing and wanting us to get more climate financing in the region and more accessible terms and benefits, etc. So that's one of the opportunities that we need to consider, and that will impact on insurance. Some of our threats, though, limited investment in agriculture still, there are increasing risk beyond the climate-related risk, etc. So with a SWOT, what do we do with the information? Let's consider how can we move forward with some of our strengths, how can we take advantage of our opportunities, how can we kind of stave off or keep off the threats, and how can we eliminate some of our weaknesses. So I just want to put that on the table as well. And to close, Lynch, I see you there already. Some of the key success factors, we need a proper legal and regulatory environment. Let me put on my attorney hat, and I heard one of the colleagues before highlight that. We need strong regulatory environment. We have a stable political system, so that should be something we should have. Sensitization of producers, another key success factor. Data collection, analysis, and management. That is also key if we are to be successful. And we need to ensure increased financing to producers aligned to risk management, link it to risk management, that would be useful. And consideration of more attractive insurance products and dissemination of information on them. We are very good in the region at sitting down here and planning and talking, and we are weak at the actual implementation. So I'm hoping coming out of this meeting that we would be able to really and truly get something beyond our path, a roadmap to having more viable products and more viable adoption of insurance in the region. So with that, let me thank you all. Have a good workshop.
Thank you very much, Mr. Glenn, for this very insightful presentation. At this moment, let me apologize on behalf of Mr. Isaac Anthony. He will not be presenting. However, he's calling. Will Miss Elizabeth Emmanuel, and Mr. David Marsh will be presenting in his stead. Miss Elizabeth Emmanuel is the head of CCRIF's Technical Assistance and Corporate Communications team, and Mr. David Marsh is the CCRIF's Chief Risk Management Officer. So let me welcome them to the podium.
You learned something new today. Hi, morning, everyone. Before I even start, I guess you would realize that I am Elizabeth. Information technology and the speed at which I type has actually caused me not to be able to write very well. So our Chief Risk Management Officer is David Maslow and not David Marsh. But I blame that on my poor handwriting skills. And I'll just ask David, because he is new. Do I turn on my audio here? No, I'm good? Because he is not so new to CRIF anymore, because he's been with us close to 9 months, I think, or 8 months, but new to the Caribbean somewhat. I'll just ask you to stand up. And some of you have met him already, but this is David. And he's here with us, coming from the African risk capacity. Right, so we'll both be sharing the presentation this morning. I do apologize for Isaac Anthony, our CEO, not being here. I think many of you do know Isaac. And our presentation today is really going to look at parametric insurance in the Caribbean. And one of the things that I'd like to say is I'd like to thank the organizers for the workshop, ECA, EU, OECS, or other colleagues, for engaging us in supporting the organization of the workshops, listening to some of the perspectives and ideas that we have. Indeed, Isaac would have been the best person to present because not only is he the Chief Executive Officer of CRIF, but he has been associated with CRIF from the inception of parametric insurance in the Caribbean. He was not the CEO in the beginning, but he strategically sat on the board of CRIF when he was the financial secretary in the Ministry of Finance in St. Lucia, representing the interests of members. He later on transitioned to CEO of CRIF, and he has been in that role from about 2013. So indeed, this presentation really looks at CRIF as a case study and an introduction of why, for example, parametric insurance was introduced in the Caribbean, how we started, why we started, and where we're going. All right? So let's begin. Okay, so let's look at how it started. And it really did start with a hurricane, Hurricane Ivan. And Hurricane Ivan happened 20 years ago. Indeed, I don't know how many of you are aware that CRIF is leading an initiative this year called Ivan Plus 20. And Ivan Plus 20 was supposed to be looking at reflecting on Hurricane Ivan, the lessons we have learned as a region, where we are today and where we hope to go tomorrow. And shock among shock for us, Beryl seems to have been Ivan at 20. How did we fare? Did we do better? What did we have in place? What was different? And it was Beryl somewhat because it followed a similar path to Ivan, right? So Hurricane Ivan is what really prompted the establishment of CRIF and the losses that Hurricane Ivan carried. 200,000% of GDP, for example, in 2 Caribbean countries, Grenada and the Cayman Islands, but several other countries in the region were impacted, as you know. And previously, what we would have in the region is countries coming together to support other regions following an event. This couldn't happen because everybody was impacted. And what this led was Caribbean governments looking towards the World Bank and requesting support to identify a mechanism that could provide some form of liquidity. Indeed, at the Ivan Plus 20 event, Resilience Dialogue in Jamaica, the then Minister of Finance at the time of Ivan for Jamaica, Omar Davies, and I'll sort of try to quote what he said. It was his turn to speak at the World Bank annual meetings that October. And he took the opportunity to visit Grenada just before October because of everything that was being said. And he was shocked. But what shocked him even more was that development partners were seeking to provide debt relief to Grenada. And as many of you would know in this room, debt relief is not aid. It is not a grant. It is a loan adding to existing debt stock. And he challenged the World Bank president at the annual meetings, for which apparently he got in trouble for, because protocolly it may not have been correct, to say, no, you can't provide loans. We have to think of a different mechanism. And the Japanese government came forward and said, hey, we would provide a loan, not a loan, a grant to the government of Jamaica to support some kind of studies that the World Bank would lead. And this is what led to the establishment of CRIF. So what it was really looking for when CRIF was established was a mechanism by which countries could access quick liquidity following a natural disaster. And the vehicle that this study showed would be the best vehicle to do that would be the introduction of parametric insurance. So just to say very quickly, parametric insurance isn't designed to cover all the losses on the ground, but it's really important to begin recovery efforts, right? So this led to the birth of CRIF, the world's first multi-country, multi-peril risk pool providing parametric insurance. It was established in 2007, and initially it was established only to limit the financial impact of hurricanes, tropical cyclones, and earthquakes. So we provide the short-term liquidity, as you would have seen, within 14 days of the event. So most of us are very familiar with Beryl. We would have seen the articles. 14 days after the event, Grenada got several payouts, I believe, totaling 44 million for 3 different perils, including coast. But CRIF, as an insurance company, is very different from an insurance broker. It's very different from a private sector insurance company. CRIF prides itself as saying it is a development insurance company because whilst it is a financial institution and it has to make profit, because if it doesn't make profit, it cannot make payouts. And I think you would have mentioned that some insurance schemes are going under, right? You have to make profit. You have to be financially sustainable. But what do you do with that profit? And part of what CRIF does with its profit is that it reinvests, one, in the organization by, in some cases, developing new products to meet the needs of countries. We don't develop products unless there are expressed interests of countries. But secondly, we also help support members with their premiums. So we have been providing, I believe, since about 2012 or so, some amount of premium support. In the latter years, we have been receiving support from our development partners for members. And also what CRIF is focused a little bit on is providing technical assistance, looking at how we can build resilience of communities, people in the region through a range of mechanisms. We also work with many of the organizations in the region, the regional organization. Indeed, we've had MOUs with the OECS since about 2015, 2016, looking, in the case of the OECS, we focus a lot on reducing vulnerability in communities and undertaking vulnerability assessments. So we pride ourselves as sort of like a Caribbean Development Bank, where it's a bank, but there is also a focus on building resilience in the Caribbean, advancing economic growth and development prospects. So as I said before, it's the world's first multi-country, multi-peril risk pool based on parametric insurance. It's the leading provider of parametric catastrophe insurance for Caribbean and Central American governments, as well as for electric utility companies, for transmission and distribution, and more recently, for water utility companies. We're able to provide quick liquidity within 14 days of an event. Based on the number of payouts we have made to date, 75 payouts, we have never missed that 14-day window. Indeed, we have provided support to countries within shorter periods of time, especially when those countries have come forward and said, listen, we need some of that payout. So for Thomas, Hurricane Thomas in 2010, the government of St. Lucia, one of their main sewage treatment plants were significantly impacted there, which was a feeder to other smaller water distribution plants. They got a percentage of their payout, I think 50%, within a week of that event, with the remaining within 14 days. This happened during Hurricane Dorian as well, and several other events. We provide insurance products that are not readily available in traditional insurance markets. And what CRIF does is it's key to closing what is referred to as this liquidity gap, which we'll discuss a little bit. And a question came up this morning about the multi-hazard environment in which the Caribbean exists. Indeed, we could be in an active hurricane season, experiencing a tropical cyclone, rainfall, and have an earthquake, right? And we do have products for that. But we'll also share with you, and David will do this, products that we're looking at that will cover multiple perils, right? So there are different ways of looking at it, but we're very cognizant of this multi-hazard environment in which we exist. So our impact and footprint today. Today, our membership stands at 30. We started with 16 members when we opened our doors in 2009. And those 30 members are from the Caribbean, 19 from the Caribbean, 4 from Central America. We have 3 electric utility companies. We have 3 water utility companies. And recently, we had a, what is it, David? A tourism, a state-owned agency that functions as a tourism attraction in the Cayman Islands, right? And the largest turtle conservation center in the Caribbean. And incidentally, following Beryl, their policy triggered as well. We offer 6 parametric insurance products: tropical cyclone, earthquake, excess rainfall, and we also offer products for the electric and water utility sector, as well as the fishery sector, compared to when we started in 2009. Today, we are what is referred to, you see the SPC, and many people say, what's that? We are a segregated portfolio company, which has allowed us to provide coverage in other geographical regions, the Caribbean and Central America. It offers us to create what is referred to as segregated portfolios, so that we're able to segregate risk in different, let's call portfolios, little pockets. We're able to segregate risks, reduce the commingling of risk, so that we're not one region or one sector isn't taking on the risk of another sector. But the beauty of a segregated portfolio company is when persons like David and Isaac go to the reinsurance market, they can bundle everything together. And what we get is reduced costs for our members. Insurance purchased through CRIF is 35 to 50% less than if some of our members sought to go to the international capital markets themselves. But again, many of our countries, because of their debt stock, they can't go to the international capital markets. So with CRIF, you get this win-win situation. We have made 75 payouts to 20 of our members, totaling $358.5 million. As I said before, they're not designed to cover all losses on the ground. They're not designed for long-term reconstruction and development. They're designed to close that immediate need following a natural disaster. So all your transmission and distribution poles have gone down. You have access to begin putting them back up. They provide the opportunity to build back stronger. So instead of having those wooden poles, we can now have steel concrete poles that would withstand another hurricane, all right, or a hurricane of a similar magnitude, but do better. I lost my train of thought because I wanted to say something else about the payout. Since in the last 4 years, we continue to increase coverage to financially protect our members. Today, coverage is over $1 billion in the last 4 years, compared to $500 million when we first began operations. And one of the things as a group here, I want us to recognize is that insurance, when we think of insurance, whether it's for agriculture, whether it's the government's purchasing parametric insurance, it is like a necessary evil. So we buy health insurance, but we don't ever. We want to be able to just go to the pharmacy and pick up something because we have a flu. But we don't want to use that insurance for chemotherapy. We never want to use it for chemotherapy. We know we have it in the event that, and it is important, but we never want to use it, if you know what I mean. And it's the same for any type of insurance, because what CRIF insurance does, and when we discuss the issue of risk layering, it's not to address, in Jamaica, we'll say the so-so flooding that happen when you have a little rain. It's not designed for that. And I think in your presentation this morning, you spoke about a layer that's really for you to deal with. And it's the same for governments. 10 boats are impacted, it's the fisherman to deal with that, or the government. You don't want to buy risk transfer for that. But what happened in Grenada, what happened in Jamaica, in St. Elizabeth, you want your policy to trigger. And as a Minister of Finance, you want to stand up and say, I will not be borrowing $1 because we have gotten this amount of money to do this. So we are committed, and David is going to speak on this now, to improve our models that underpin our policies, to enable things like model losses to more accurately reflect actual losses on the ground. We heard about basis risk earlier. Our models help to reduce what is referred to as basis risk, and David will speak a little more about those models and how they differ from what we have been hearing a lot about, cat-in-the-box models. And of course, as I mentioned before, we have developed a technical assistance program aimed at building resilience, sort of akin to how a foundation will operate. So I'll now invite David to come forward and speak a little bit about parametric insurance or anything he wants to talk about, but parametric insurance and our models.
Thank you, Liz. Thanks for that. Down, up? All right. Yeah.
Right. And up.
Good morning, everyone, and thank you, Liz. So indeed, I'll talk about parametric insurance. I'm a Chief Risk Management Officer of CRIF. Before that, I was working at the African Risk Capacity, so it's been over 10 years that I work with parametric insurance, that I work in what we call a development insurance company, and that we design products, offer products to governments and other stakeholders to be able to build climatic resilience. So I think a lot have been said on parametric insurance, and I don't want to repeat some of the concepts that have been explained technically by some of the colleagues this morning, but really what is important distinction to make on the parametric insurance is the speed, the certainty, and the sustainability of the products. Right? By doing parametric insurance at the scale of a region, the Caribbean, Central America, or Africa, Asia, we are able to cover very large areas, to cover a very large number of people, and to pay off very quickly after an event happened. Right? But to do that, we have to underpin our products over models. Right? And going back to the presentation we saw this morning, you will remember that a parametric insurance product is composed in multiple modules. We will have, on the one hand, the hazard model, we will have the vulnerability, and we will have the exposure. Right? And that will help us to build products. So at CRIF, we decided now a few years ago that the Caribbean region lacked accurate, in-depth models, that the models available on the market were not necessarily, I would say, precise enough, complete enough, and that not enough resources were necessarily put into the models for the island states of the Caribbean. And therefore, CRIF went on a journey to build its own model to capture the impact of several hazards in the region. The first ones that were built are for tropical cyclone, for earthquake, and for excess rainfall. Further to this, we have also developed models that capture the impact of adverse weathers, that includes as well the effects of waves and storm surge on the shores. And we are currently as well, sorry, Liz, I think you have a phone call. We are also currently designing drought models as well, so we can capture not only the agricultural impact of drought in the region, but also other impacts of droughts, for example, to utilities, electrical, water utilities, and others. The way we work is that we model a hazard, and then we will use various vulnerability functions, exposure data, to package one or more hazards or models into a product. And we will distribute this product at multiple levels. So as Liz mentioned, historically, CRIF has modeled or offered these products to the sovereign level. So we have offered products for tropical cyclone, we have offered products for earthquake, and we have offered excess rainfall products straight to the governments of the Caribbean and then to the Central American governments. Later on, we also started to expand the definition of these sovereign products with a product like Coast, which is targeted to the fishery sector, that is still a product taken up by the governments, but with very clearly defined beneficiaries, which are the fisher folks in the country. Further to this, we've also started to go a bit lower in terms of the value chain, in terms of the pyramid that we saw as well this morning. And we started to look at state-owned agencies, or if you like, the meso-level stakeholders, right? So we now are providing products, or design products specifically for the electrical utilities and the water utilities. How do we do this? Quite simply, we're using the same hazard models that we have developed for the governments, and we are adapting the exposure and the vulnerability to the realities of the utilities. So in the event, or in the case of electrical utilities, for example, we will receive information and data about the transmission and distribution lines. We will understand and analyze the vulnerability of these lines to winds, to earthquake, for example, and we will develop a specific product for the water utilities that is really covering that specific need. These products can be, therefore, covering only one hazard, or they can be also covering multiple hazards. In the event of our water utility product, for example, we will cover not only tropical cyclone and wind damages, but we will also cover, for example, excess rainfall damage. And these two together are bounded within and packaged together within one product for the water utilities. So moving along, sorry, Liz, here we go. I don't know where that moved. Is that a PowerPoint here? I don't know. Somebody called you. I think it's there. Okay. Yeah. Great. Thank you. So as I mentioned, we have built our models and our products on really these 5 modules, the hazards, and as you can tell, we have a very extensive database of hazards. Our earthquake database goes all the way to the 1500s. Our tropical cyclone database started in 1800s, and our excess rainfall almost in the year 2000, in 1998. In terms of exposure as well, we have worked with countries, with regional entities to really gather the most exhaustive exposure database available to us at this point in time, and we have worked with all the sources of data that we have to really try to present the exposure as accurately as we can. Our vulnerability is driven by scientific research, published work from various consultants and partners that we have to really make sure that we capture as accurately as possible the impact of the winds, the rainfall, the earthquake on the various assets that we are covering. Now, one of the big differences between our products and things that we can also find on the market is that we cover what we call a model loss. Many of these products on the market will stop at the hazard level, right? It will be what we kind of call a pure parametric model, where we will look at wind speed, for example. We could look at the numbers of days without rainfall. We could be looking at millimeters of flood, and we will be setting these parameters and this level as various thresholds. For example, Liz talked a bit earlier about what we call a cat in the box. A cat in the box, for example, for tropical cyclone would be to say, here's a 10 kilometers perimeter around Barbados. If a category 3 tropical cyclone trajectory or track comes in that perimeter, we will pay you X amount of dollars. That's a very straightforward, pure parametric. We are working on the hazard only, and we are not necessarily modeling the loss on the ground. What CRIF is doing for its earthquake, tropical cyclone, and excess rainfall, but other products that we have, is that we will go one step further. We try to understand what is the impact of these hazards on the exposure on the ground, and what is the amount of loss caused by these various hazards. Right? It's a bit of an adventurous exercise, because it means that we need to have accurate exposure. It means that we need to have accurate vulnerability functions. We need to calibrate these functions and this data with data from the ground, which is often hard to find. Right? But we try this because not only it helps us to cover the countries the best way possible, but it also provides very valuable information to the countries on how to best respond to the disaster. We go further than explaining that you have a category 3 cyclone hitting your country. We go as far as trying to quantify what would be the impact. Obviously, Sometimes this quantification is not absolutely accurate. It may be slightly overestimated, it may be slightly underestimated. And that difference is what we call the basis risk of the parametric insurance product. And that basis risk will never go away because it is absolutely impossible to model exactly, precisely the impact on the ground. Right? But our job and what we work every day is to minimize that basis risk, to make sure that it is as little as possible and as negligible as possible. Right? That means that sometimes we may be paying out a little bit too much, sometimes we may be paying out a little bit too little, but we believe that that difference is minor enough to be acceptable by us, by the clients, by the countries, but also that it will even out over time. Right? So that all the small positive and all of the small negatives will actually even out to zero and not be beneficial to anybody or detrimental. So this is the exercise that we do, and that really leads us to this parametric insurance model that we have. What I will also say is that we look at these products in multiple ways. I've already mentioned the sovereign. I've mentioned when we work with governments to cover specific beneficiaries, as in the case of coast. We are also now, as I said, covering electrical and water utilities. We are, as Liz mentioned, expanding as well our activity to cover state-owned agencies, and we are available for that. But we also are looking at the micro-insurance level, not directly, because this is not necessarily our role to go out there and sell to each farmers or each fisher folk an insurance policy, but we work with the local insurance market, we work with brokers, we work with companies to distribute some of the solutions that we have, and we provide them as well with not only the technology and the models, but also any support in terms of insurance, reinsurance that we can provide to really distribute and cover as many people as possible. Our next steps and our research and development pipeline at the moment is extremely wide because I believe the needs are extremely wide in the region. Our main priority, and I think extremely relevant here, is that we are looking at developing a multi-peril agricultural product. Right, so we are going to launch in 2025 a multi-peril agricultural product. This will include a drought component, a very new drought component for CRIF, and we are in the process of finalizing this modeling work, and it will also include any impact from our captured from our tropical cyclone and our excess rainfall model as well, to make sure that we cover as many hazards as possible on the agriculture. We continue as well to refine a flood. We now have launched a flood runoff model, so we can also cover river flooding in our countries, specifically for larger Central American countries. And then we are also looking at how we can apply all our modeling work to build products specialized and targeting the housing sector, the tourism sector, any form of governmental infrastructures, any form of airport, ports, and any other critical infrastructures for the countries. And additionally, we're also looking at new perils and building new models. Top of the list are volcanoes, but also we have additional extreme heat and additional fires, wildfires, and additional perils that we are looking at the moment in the pipeline over the next couple of years. Thank you. Please. You want to come back? No, you can go ahead. Yeah.
Okay, just before we close off, we introduced the concept of the liquidity gap, and we wanted to share it with you graphically what exactly it is and what our role is in that gap. We exist to close the liquidity gap. So once you have a catastrophe event, what actually happens on the ground is that you see your national disaster agencies, communities, etc., coming forward and providing short-term assistance. That's emergency response. Right? Within 14 days, CRIF comes in to close that need for cash that a government has. Remember, many governments in our region do not have savings accounts. I mean, we hear the Minister of Finance for Jamaica speaking a lot about a dedicated reserve fund at the government central bank, which is dedicated for natural disasters. And these funds are not funds that the National Disaster Organization has, right? So there is need for this amount of liquidity in the country. And this is where CRIF comes in to provide this injection of liquidity following 14 days to begin recovery efforts. And I want to dispel the notion that persons tend to have sometimes, well, do the payouts go to people? Yes. And we live in a space where, you know, someone mentioned this morning, we don't have political unrest, and our governments are, I mean, we have how governments have used their payouts. So payouts may be used, for example, they're not just used for infrastructure, but we have examples. I think I was meeting with you, was it with you this week? Where I was telling you the specific examples? For agriculture. So for example, following Hurricane Matthew, St. Lucia received a payout under its excess rainfall policy for 3.8 million. And that entire payout went to banana farmers because of the impact that Matthew had on the banana industry. But then, under Matthew, the government of Haiti did a similar thing, right? Part of their 20 million payout went to the agricultural sector. We see it repeated year on year in Trinidad when they have payouts for rainfall, where a percentage goes to the agricultural sector or to people in the form of vouchers to help build back, to buy furniture. We've had that example in Trinidad where communities were flooded in 2018. A lot of the payout went to the Social Development Commission, not commission, they don't call it a commission, department that actually gave, they utilized hardware stores, furniture stores, once they assessed what you needed. If your house got flooded out and you needed a fridge, they sent you to, I believe it was Courts, and you picked up a fridge because they paid for that fridge. So that's how payouts do get into the hands of people. And we are working closely with the social protection systems in the countries through WFP and Global Affairs Canada to even top up policies so that the social protection systems can be, the cash transfers can be allocated following natural disasters. So this is the liquidity gap. And following the gap, you do have long-term reconstruction and redevelopment. And some of CRIF's payouts are used by governments for that as well. So for schools, etc., as in the case of TCI following Hurricane Irma. Now, just to say that your CRIF instrument is not, the positioning of the instrument, and we had another similar graph this morning showing the risk layer and risk layering and what that means. And when we talk about risk layering, we're looking at two things. The probability of an event occurring. So we have some events that occur all the time. You know, from all of us were young, we hear of a rainy season, a dry season. So we have that. We have events that occur all the time. Is a product, are all products for this event. And we have some events that, for example, associated with climate change, where we have increasing frequency, intensity, unpredictability, where we need, they are less frequent in occurrence. But we also have the concept of severity. Some events have low severity. So we may have rain today and the whole of Bridgetown may sort of flood out, drain out by this evening, low severity, but you also have high severity. And what we have here is that we're showcasing the different risk layers, low, medium, and high, and some of the different disaster risk financing instruments to capture these different levels. All right? And this particular graph, we worked with the World Bank and their DRF team to sort of come together and put this together, just to add that. So in the low layers, you may have things like your contingent budgets, your national budgets, etc., that will deal with local flooding. But when we talk about catastrophic events like Hurricane Beryl, this is where your parametric insurance may come in. But indemnity insurance is also considered a DRF tool as well. You may have things like your cat bonds and so on that we're hearing a lot about. And I think we have basically used up all our time. Hold on. So this is a sense of our payouts coming to you. payouts. And just to say that following Hurricane Beryl, we paid out, I think we did about 10 payouts, totaling about 75 million. For this year, we have done 90 million in payouts. In fact, a rain event in Guatemala, they received a full payout on their policy of 6.376 million US dollars. And one may say, oh my, are they not going to be protected for the rest of the year because they received their full payout? And whilst we're not going to be discussing this now, recognizing that climate change is here and recognizing that countries can be left exposed because of frequency, intensity of events, what we have done is included what is referred to as policy endorsements in some of our policies. So just as how you may have a policy for life insurance, and as a woman, we're susceptible to, say, breast cancer, and you can add a little add-on to that life insurance policy. So we did that. We have these add-ons. So once Guatemala's policy triggered to the full amount, we have an endorsement called a reinstatement in sum insured cover, where they pay a small amount of money, very minute, for that endorsement, which gives them back their full coverage of $6.376 million in the event that they have several other events that will add up to that, or another big event that will cover that, all right? And we have several others that we may be able to discuss throughout today. And I think we have other slides, but I believe our half an hour is finished. So I just want to add one final thing, on that, is that to bear in mind that CRIF is a risk pool. We are not an insurance company. We are a risk pool, and that risk pool provides many benefits because it provides the benefit of enabling insurance or products to be more affordable, to help members increase their coverage. Lower costs are possible, as I mentioned this morning, because we're able to pool everything and take one package to the reinsurance markets. Because of a risk pool, we're able to achieve financial and operational efficiencies. The risk pool keeps growing, which is good for all our members, and it has allowed us to enter new geographical markets. And what we're doing as part of the risk pool as well is also strengthening regional and sub-regional cooperation between the Caribbean and Central America and South cooperation. A question came this morning, or a comment, about whether or not reinsurers would want to continue providing capacity to the region. As CRIF operates as a development insurance company, it has gotten a lot of favor with the reinsurance market, and we are getting the capacity that we need. And I'm going to ask David I am sure that this year our our reinsurance did not increase. It went down. We have more members, more products, because we are carrying to the reinsurance market the fact that we do not exist for profit, but we exist to reduce vulnerability and to help countries build back better, which augurs well for us to provide products, for example, like housing products. You know, I mean, look at the price of insurance. Many people are going uninsured in the Caribbean because insurance companies are not getting the capacity to provide home insurance. So you're paying thousands of US dollars in home insurance, which is causing some people, because what it does, it pushes people out of that space to be able to afford. So I will end on that note, and I know, Dr. Jules, you had a question, and you're coming. So should I be scared?
No, you shouldn't be. Actually, to the contrary, I think you should pay me after this.
I'm going to get David to write a check.
I wanted to say that for me, one of the most important things of this consultation is this presentation we've just heard. Because parametric, as you heard, and what CRIF is doing is not part of the usual commercial market. And one of the things that we've advised our governments to do is to, at the OECS, is to buy bigger into the CRIF products. We saw what Grenada got. In fact, I think your figures, if I may stand corrected, may be a little off, because my understanding is that Grenada got about 55 million. The 45 you cited was what government got, but then the utility companies, yeah, so it comes to about 55 million US. Now, over that period, since Hurricane Ivan, Grenada has been paying CRIF to the point where they were beginning to question, is it worthwhile having spent about $17 million in payments? Is this thing ever going to be of benefit to us? And then comes Beryl, and they get 55 million in payouts. So, and what I see happening in the insurance market, and by the way, I'm not an insurance person, but I study those things carefully. What I see happening in the insurance market is that in St. Lucia, for example, there are at least 2 companies that have pulled out of automobile insurance, car insurance, because of what the madness happening on the roads. They're not going to take that risk anymore. So in the private sector, this clearly has to be, and you don't blame them. It's business. You can't be financing insurance for you to be constantly losing, because then you don't have a business. So CRIF is a very different creature. And among the suggestions we made is that our governments need to take this more seriously. This is a Caribbean-grown initiative, or even initiated product. Buy more into it, and let us find ways of making it serve the purposes of resilience better. So for example, if in the agricultural sector, we've said, because you get paid out by the trigger event, assume that nothing happens to my farm. The government can either take that money and roll it back into the next round of payments, or in fact, give farmers a portion of that money to build their farms to a greater degree of resilience, given the threats that we face. Equally, in low-income housing, she said it a while ago, a lot of even middle-class people are dropping out of the home insurance market because it's just becoming more and more unaffordable. And even then, you don't get a payment that is substantial enough to build back better if your house is destroyed. So I think enough said, but I think this is something that we need to take very seriously. And most importantly, as our governments fight internationally and on the diplomatic and geopolitical front so that the polluters pay better, our access to climate financing, some of that should go into helping to build CRIF stronger. Thanks.
Thank you so much, Dr. Jules. And I'll just throw out here to you, if you want to learn more about CRIF, we do have a 45-hour course in disaster risk financing and parametric insurance in collaboration with the University of the West Indies. You get 4 credits for that are transferable to other degrees. So if you are interested in this space, please feel free to. One starts today. Too late if you haven't registered. We have more.
Thank you very much, Mrs. Emmanuel and Mr. Maslow. I got it. At this point, let me open the floor for questions, and we will limit it to 10 minutes in light of our slight overshoot of time. Yes, Mr.
Okay. A pleasant afternoon. My name is Kyron Barker, Program Specialist at the CARICOM Development Fund. I have lead responsibility for agribusiness in the institution. I have a question for Alistair related to a point that he made, and it relates to the issue of education. Do we have a fair sense that the farming fisheries community have a good understanding of insurance benefits, even products? If you don't think so, where do you see education of the community on the benefits of insurance towards the attainment of a sustainable food production sector in the OECS and the wider Caribbean?
Yeah. Thanks for that. Just my perspective, I still don't think there's enough sensitization being directed towards the farmers or the fisher folk. Again, I may sound as a dead horse, but I feel that's where extension comes in. The incorporate extension is to transfer that information to the producers for the uptake. I think it will add significant value if it's done, even if the producers themselves cannot purchase insurance, but they can at least advocate for governments to undertake that procurement of the insurance on their behalf, or even if it is they can support policies, as Liz shared as well. There is the perception that farmers don't receive the benefits or that the monies are not applied appropriately. I think there's need for sensitization, so there's confidence in the system, and I believe overall that augurs well for advancement of insurance, sustainable insurance in the region, and sustainable food production.
All right, and if I could add a little to it, we have been working with NGOs to actually work with their stakeholders and their constituents. So in Trinidad, we're working with a group called I Am Movement, who works a lot with farmers, and we are working with them to help them sensitize their constituencies. We helped the CPDC, for example, to produce a manual on sustainable agriculture and climate resilient agriculture. But we're working with organizations like the OECS through MOUs to also to build capacity amongst communities for insurance. And let us not discount the importance of cooperatives, because cooperatives are key. If we build the capacity of cooperatives, they build the capacity of their members. And if we get cooperatives sold on insurance, which they are in St. Lucia for fisheries insurance, because they want to buy coast. They don't want the government to buy coast, right? So if we get through to our cooperatives, that would also be good.
Thank you very much. Do we have another question? Yes, go ahead, please.
It's a brief question. It's for David or Elizabeth. How do you, what is the premium paid by the governments, and or how do you establish it?
Thank you. So to find the premium payable by the government or any policy holder, we have to go back to the concept of average annual loss. And you may remember it was touched earlier, right? The average annual loss is essentially a probability-weighted amount of claim. Right? So as insurer, our starting point for the premium is how much do I expect to pay this year, right? And on top of that, we will add a series of loading. Now, in the case of CRIF, because we are a regional risk pool, we also have very little commission, tax, payable, and everything. We can bring up a very small loading onto this average annual expected loss to come up with the premium. The market itself will have to also add any form of brokerage fees, any technical fees, any tax, anything like that. But in the event of our sovereign insurance policies, we manage to keep this very low. So essentially, our margin over the risk is extremely low, right? And this is what the countries pay. And this is why at the end of the day, our point of view is that we offer concessional insurance premium, because really it is the minimum, it is set at the minimum profit margin, if you like, that will not only help us to be sustainable as a risk pool, but also ensure that the government can maximize the amount of coverage that they buy. So it will really depend from country to country. The second element that is important is that the parameters of the insurance policy can change, and they can be selected by each of the policy holder. So the attachment point, which is essentially the level of triggering the payout, the coverage limit, the ceiling, all of these kind of technical terms that are the features of the insurance policy are discretionary to the policyholder. So every year we engage every country. We have what we call a renewal meeting. We go over the performance of the policies, the performance of the risk pool. We go over the risk profile, and we discuss with them, what do you want to be covered for? What is the frequency of events that you want to set as a threshold to trigger your policy? Obviously, the lowest, the more expensive your policy will be, because you will have more expectation of receiving a payout. If you want to cover yourself only for catastrophic risk, maybe something that triggers 10 years, 15 years, 20 years, obviously, that means that you will have a lot more coverage for your premium, but you must understand that you will not receive a payout as frequently as you would have otherwise received. So we engaged with this conversation to set up the parameters, and on the basis of these parameters, we can come up with a premium that we inform the countries. Usually, we really go through this consultation effort. We provide a few options, and then that goes through, I would say, some form of governance approval process that is quite specific from country to country, but ultimately, the decision is really homegrown. And
thank you very much. We do have a question from Mr. Isaac Anthony.
Yeah, thank you very much. Yeah, it's not so much a question, but just to make a couple of comments. And first of all, let me also apologize for not being with you in Barbados. And unfortunately, due to circumstances beyond my control, I couldn't be here. And I'm glad that, David and Liz were able to stand in. As you can see, I was clearly not missed. So thank you very much for this. And also to take this quick opportunity to thank the sponsors and the organizers for what I consider to be a very, very important exercise. I mean, agricultural insurance is an area that is very close to our hearts. We are very, very committed to working with all the stakeholders to come up with a very important solution for the region. One of the things that really surprised me, I must say, looking at the situation analysis, was the extent to which, agriculture in terms of economic activity has shrunk. But I don't think we should be disillusioned. As we know, we really need to focus on the aspect of food security, as has been emphasized, but also the role that agriculture can play in helping to diversify the economic base. So that's, I think, is an important point. But having said that, I want to take the opportunity to say that, with the parametric insurance solutions that we provide, we can certainly help to de-risk the sector and help bolster the development of the sector. And let me also take the opportunity to really thank Dr. Jules for the words of support and recognizing the role that CRIF is playing in the region. We are not here, of course, to keep out the private sector. We are really here to provide solutions that are not readily available in the private sector. And in fact, if we see what's happening right now, and the point was made earlier, more recently with the hardening of the reinsurance market, it's very difficult for people to get insurance for a number of things. And even when it's available, it is very, very costly. But guess what? Given the reputation, given CRIF's global profile, given the work that we've been able to do, particularly as a development insurance company, the reinsurers, that concept of CRIF being not a regular insurance company, right, but a development insurer, has resonated very well to the extent that we really don't have any issues getting reinsurance, number one. And as Liz would have suggested in a presentation, we've been able to negotiate reasonably good rates. And on the question, and that very last question asked about, how much the countries are paying. While we are not at liberty to provide those specific details, but I can certainly point you to a study that has been done by the World Bank, which actually indicates that the the premium that the countries pay to CRIF is about 50% of what they would otherwise have to pay if they had to go to the regular commercial markets. So to me, that's significant. And why is that? Number one is because we are a risk pooling facility. So we pool the risks, we diversify the risk, and then that enables us to be able to reduce costs. The other important thing is that we're able to achieve economies of scale. With economies of scale, we're able to reduce the costs even further. But again, as Liz would have pointed out, and Dr. Jules emphasized, you know, we are not in this business to make profits for our shareholders. What we seek to do is to optimize value for our members, thereby reducing the cost even further. So clearly, you know, the role that we are playing is a very, very important one. And again, you know, we had the recent proof of concept, you know, illustrated very clearly in what happened in the case of Grenada, where Grenada was able, every policy that Grenada as a country purchased actually triggered. And I think more recently, and I'm not even sure that's public knowledge, but even the what you call the disaster clause, which is basically using CRIF's model loss information to calibrate the instrument. The government is now in a position to be able to call on the debtors. So it's amazing what has happened in the case of Grenada, and I think this is really a very good template, I think, for other countries in the region. But this is not where we are stopping. We do have an opportunity to build on that success. There are a number of products, as again, David has already highlighted, that we want to work with our stakeholders to develop. But of course, we need the support. We need the support of the stakeholders. We need the support of the development partners, because these things, as you know, do cost money. It requires a significant amount of investment. But a key point is that we are in a position to support and help to de-risk the agricultural and fisheries sector, and to be able to support the continued growth of those sectors. So let me not take any more of your time. I know lunch is coming, but again, just really to thank you for this brief opportunity.
Thank you very much, Mr. Isa. I see Mr. Damien at the back with a question. Go ahead, sir.
Good morning. I think it's still morning, right? No, morning, long gone. Right, my question, thanks very much for the presentations. My question, well, comment and question, leading from the presentation that Alistair had made, where he identified non-climatic risks, such as larceny and so on, as major issues facing the farming sector. I'm just wondering, how far are we away from including, perhaps in same parametric models, solutions that cover larceny, animal predation, pest and disease problems that actually also affect the sector, and perhaps even more frequently than some of the climatic events that we are speaking about? Thank you.
Great. So it is important to remember that, and I speak for CRIF here, what we do is parametric insurance, and at the heart of parametric insurance is a model, and what we can cover are things that we can model to a large extent. So there are obviously a few constraints to modeling. The first one is, can we actually model it? Is it something that is modelable? And the second one is, can we have the robust data and everything, the source of information necessary for us to be able to model it. There are things that are going to be extremely difficult and probably more adapted to other type of products. Larceny, I think, is probably one. But there are other risks that you mentioned that we can possibly work on. It's extremely difficult, but we could possibly work on it. The pest and disease, for example, is something that we've been looking at, not necessarily in this region just yet, but I know in other parts of the world it's been really investigated. And there are possible, I would say, solutions for modeling the pest. It's possible in some cases that this type of pest infestations can be seen from satellite, or that the impact of this pest can be seen through modeling of satellite, interpretation of satellite data. It is extremely new and innovative subject. But obviously, from our point of view at CRIF, as I mentioned earlier, as we are looking to develop a multi-peril agricultural insurance product, we keep our eyes very much open, and we stay very close to this kind of research and development. There are also other factors that can impact. I'm thinking of fires, for example, as well, that can potentially affect the crops. And this is also a hazard that is starting to be modeled. And there are a few products out there that are trying, innovating in that space, and we will see how we can integrate them. What is really important to mention as well is that for anything that we want to do, we need this data. We need to have the data, the resolution that is satisfactory to us. We need to be able also to have historical data to calibrate. So if we can find satellite data set that is at a resolution high enough for us to be able to start looking at fields level, for example, that we start to have enough historical data to be able to really understand what were the impacts of pests, what were the impact of fires on crops at that specific moment. If we could have that resolution and that extent and exhaustive data set, I believe we could be starting to develop some things. But in this region and in many other parts of the world, it's extremely challenging. So what we are starting to do, there are a few companies out there, insurtechs and other technology companies that are starting to gather this type of information, right? But for us to be able to build an insurance product, we will need to wait a few more years so that whatever we're starting to gather now can validate and help us to build something that we have confidence in, not only for ourselves, but also for whoever we're insuring. We don't want to insure somebody with the wrong models. Yeah.
Just a quick comment. I know I read somewhere that Grace Kennedy was doing some work with that in Jamaica. So I don't know if the colleague from Grace Kennedy in the room could just respond to Damien a bit, that they were looking at insurance either for pests and disease or other risks. Is he still here?
Yes, we are in fact looking into it. It's a very interesting topic, as in Jamaica it's on the rise and has been something that is at the forefront for most of our farmers locally. So we're looking at trying to develop something, but we're not yet at that stage that I could say that it's going to be rolled out within a particular time frame. But it's something definitely that we're trying to see how soon we can get up and running.
Thank you very much. Unfortunately, I must bring this conclusion to a close. We're running a bit late. Let me take the opportunity to thank the panelists, Mr. Maslow, Mrs. Emmanuel, and Mr. Glean for this very insightful presentation. However, during the closing session, at the end of the day, you may have the opportunity to ask a follow-up question. So just keep it in mind. With regards, we're going to proceed to lunch right now. It is 5 minutes past 1. And let me indicate that we'd like to have a prompt start at 1:45. And so let me invite everyone to lunch. Thank you very much.